Okay, hi guys, this is Louis from Nice Pip speaking. We are back again with good stuff. As you guys know, good stuff always. So if you haven't subscribed to the channel, make sure you hit the subscribe button and turn on the notifications, because I release good content each and every time and again. So in today's video, I'm gonna talk about my three favorite topics, like joining them together, which is number 1 BTMM, number 2 ICT, and number 3 price action. So I'm gonna show a swinging strategy like that can help you close multiple pips. When I say multiple pips, I'm talking about trading on daily chart and you close something like 1000 pips, not less than 300 pips. So on my screen here, if you pay attention, you see there are many lines that you may not understand, but it's like this. I dropped a book, the quarters theory books, in my VIP group, which I'm gonna link. I'm gonna put a link down in the description of where you can download the book on my website. Then it will help you draw these lines. So, but basically, what these lines are saying, I got my weekly chart. What these lines are saying, we have the yellow lines. From each yellow line to each yellow line to the other yellow line, which is down here, there are 1000 pips, right? A major quarter of 1000 pips. So if you can see, 0.64000 to 0.74000, that's 1000 pips from here to here, 1000 pips. The red line, from the yellow line to the red line to the green line to the red line, these are 250 pips. From the yellow line to the red line, 250. From the red line to the green, 250. From the green to the red, 250. From the red to the yellow. So the 250 pips generally are red, but why did I put the green line? Because it's the midpoint. If we are saying from 0.64 to 0.74, there are 1000. From 0.64 to this one here, 0.665, that's 250. From 0.665 to 0.69, that's 500, that's 250 pips. But it's the half point of these 1000 pips, which makes it 500 pips. So it's the midpoint. That's why I gave it the color green. Hope you can understand that very well. From the yellow line to the next yellow line, that's from 0.64 to 0.74, these are 1000 pips. From the yellow to the red, there are 250. From the red to the green, 250. From the green to the other red, 250. From the red to the other yellow, that's 250 pips as well. So the black lines only represent 100 pips, 100 pips. As you can see, 0.73, 0.72, 0.71, 0.70, 0.69, 0.6. So the black lines only represent 1000 pips, 1000 pips. I'm gonna drop a book in the description below. So that they can guide you in drawing the quarters theory line. So basically, I'm talking about the quarters theory BTMM because I have my TDI setup and I have my ICT things that my ICT instruments that I'll show earlier on. Now, after drawing these lines, let's move on to the daily chart, because that's where we're gonna get our entries and that's where we're gonna swing. So what I see here from this pointing, let me start from, maybe if I start from here, okay, fine. What I see from all of this is I see a downtrend, right? I see that price is coming from a certain quarter. And it's coming to the zone of 0.7400. My VIP students know when I'm talking about the quarters, 0.74000. So as it dropped, right, let me do this. It's dropping. We can see a downtrend, a series of lower lows and lower highs. It got to this 0.7400, which is the beginning of a larger quarter, right? So when it got here, we see consolidation. As we can see here, we see consolidation, because under normal circumstances, whenever we approach a certain zone where price is expected to reverse, we could have just had this price bouncing here, giving us a W, then returns. But whenever we saw this consolidation, something weird was happening here. So either the price was gonna rise or was gonna drop. But we know very well, I always say that from consolidation, whenever price moves from consolidation, there is expansion. Every time after consolidation, there is expansion. We can never have consolidation then retracement or consolidation then reversal. No, it's always consolidation then expansion. Whenever there is consolidation like this, there is expansion. What's expansion? Expansion is a rapid or a fast movement from a certain zone. You can see here consolidation then expansion. Whenever there is consolidation, we see expansion. So here we saw consolidation, so we were expecting a what? An expansion, right? We saw consolidation, it expanded downwards. So when it expanded downwards, there is a retracement here. All of this we are watching. We are not doing anything. Remember, this is a daily chart, so it requires excess patience here. So we have consolidation, then it expanded downwards, giving us this swing low. What's a swing low? I always say it, right? A swing low is a point where we have a candle that's indicating a low, usually lower or higher than the previous low. And if we look at the characteristics of a swing low, it's a candle that has a higher candle to the left and a higher candle to the right. This is a true swing low. This another one is a swing high because it's a candle with a lower candle to the left, a lower candle to the right. This is a swing high. So we have this swing low here that was created from the expansion that came from consolidation. So consolidation, expansion, we were given a swing low, then retracement, right? So now we have two components. We have the swing low and we have this consolidation. Let's look for a swing high in the consolidation. I see this point here of swing high, right? So what I'm gonna do is I'm looking for sell entries. Why? Because when it got into the zone of 74,000, it's already inside the zone. So I'm looking at setups that take me to sell, because whenever I'm in a quarter, I'm looking at closing at least 1,000 pips or at most 1,000 pips that take me to the next quarter point, right? So now I have my swing low and I have my swing high. So I'm gonna take my fib. Remember, the fib that I'm using here is the ICT type of Fibonacci. I'm going to take my Fibonacci retracement. This fib here is the type of ICT type of Fibonacci. I think I'm going to drop the settings of how you can set it up in the description, or I'm going to put the information down in the website in the PDF. So now from this swing low, because it's a downtrend, I'm going down. And there I am to my swing high. So price from the swing high to the swing low retracement, it hit the equilibrium point. So our entries in a sell setup, they are above the equilibrium. In a buy setup, I'm just gonna put a mock fib here so that you can see what I'm saying. In a buy setup, let me do this. In a buy setup from this swing low to this swing high, maybe in an example, our buy, we're expecting that it rises, drops to equilibrium. So our buys, we take our buys anywhere below the equilibrium, Why? Then we have our stop loss below the swing low. This is for buy. For sells, it's the same thing. We take our sells anywhere above the equilibrium, then we have our stops some 5 or 7 pips below or above, 5 or 7 pips above the swing high. So now here I have my swing high, I have my swing low, right? Then retracement, it retraced to equilibrium. Let's look at the pattern, the candlestick pattern count. I'm zooming in so that people can see clearly. Now the red candle begins showing me a reversal sign, a reversal pattern at equilibrium. Showing me a reversal pattern at equilibrium. Right. Now, this is where I take my sell entry. Then I sell it here. I put my stop loss where? Remove this so that the chart looks good. Okay, good. So now at equilibrium, I take my sell. I put my stop loss some 5 or 7 pips below this 100 point, which is my swing high. Now it retraced another time, it retraced again. Now my sell start moving to my target number 1. No, your fib has it all, right? The ICT fib has it all. It's not like the fib has the magic, but it's not like Fibonacci trading, is Michael always says it. It's not Fibonacci trading, actually. It's ICT, right? So now we have we take our sell here. Our first target was hit. So whenever the first target is hit, that's when we take the stop loss and we put it at entry point, because there are possibilities that it may return. I didn't say put stop loss at break even. You can just put it at entry point. Remember, the first target is already hit. Now you are now aiming for target number 2, target number 3, and target number 4. Right. The first target is already hit. And how many pips? Let me do this, just to count our pips from the point of entry. Okay, these are 263 pips. Making sense, right? 263 pips. That's why I said these are swing trades. These are positions that you hold for quite longer, right? Not the day trades, the scalping that we always do, right? Then when you put your stop loss at entry, right, it rises again, but you can see difficulty. You can see difficulty, consolidation and expansion, right? So obviously the stop loss was now hit, but at break even, because there was difficulty in expanding to target number 2, target number 3, but at least target number 1 was hit on the first setup. So let's consider this setup gone, but I'm sure people understood what I'm trying to say. The price moved from another quarter into this quarter. When it got to this quarter, it consolidated, gave us an expansion move, a swing low. Now we are looking for the short term swing high and this short term swing low. We put our fib, the ICT fib. We put our ICT fib when it retraces to equilibrium, because this is what happens in Forex. When we are selling, we are looking at selling at premium prices, and when we are buying, we're looking at buying at retail prices. No, we buy at discount price, then we sell at premium price. Now, whenever price is anywhere above the equilibrium in a selling setup, we consider this premium price. Whenever price is somewhere below the equilibrium point in a buying setup like this, a buying scenario, whenever price rises, then it drops below equilibrium, we consider this discount price. So the discount price we are looking at buying, the premium price we are looking at selling, right? Cool, I'm sure people understood that. Let's move on. Now I have my Fibonacci removed. Now we took our target 1, stop loss was hit at break even. Break even is not a loss, right? Is when stop loss is hit in profit, right? Now the price returned back to our zone of interest, which is 0.7400. Remember, only movement from here up to here, these are 100 pips, because this is daily chart, right? From here up to here, these are 100 pips, 200 pips, 250 pips to the red line, right? Okay. Now price again is back in our zone of interest, at our zone of interest, right? Remember, when we are doing swing trades, you need to apply patience. Patience work. Don't chase the price. Don't chase the current price. Now, there's no need to chase the current price. Today is Saturday. That's why I don't have any internet connection. I'm using this time to analyze the charts of the trades that we actually took last week, because in some groups we had AUD, USD sell, and we closed it in good profits. Now price is back again to that zone, right? Now we are looking for the other swing low. Now the first swing low that I see here, let me zoom in my chart a little bit. Price hit, gave me this, then it retraced a bit. So obviously in the position of a trader, I was gonna get my fib, push it from here up to here. I don't want it right from this swing high to this maybe low that we were given, a low kind of consolidation, but price did not return here. Instead, it even expanded downwards. Remember, a consolidation, then expansion. So it expanded downwards. So it's still okay that price expanded downwards. It's okay that price expanded downwards. So what we want is the swing high and the swing low. Let me have my instrument here. Now, this is the swing high down to this swing low that we were given here, the low that is actually lower than all the lows that we were having, right? Then a retracement. Now let's look at the pattern, candlestick pattern at equilibrium. Green candles, green candles, green candles. Definitely you're not gonna sell when you don't see clear candlestick pattern that indicate a reversal. Then red candles begin at a very good point, right above the equilibrium, which is kind of a premium price for us because that's where we are selling. Now we put our first sell here because that's where we have a reversal. Then our sell rise, retraced back again to this OTE zone. Whenever price hit this OTE zone, OTE actually stands for optimum trade entry. This is a very important and highly profitable zone. This is the zones where I hard sell or I hard buy. So here I'm not looking, because I entered the trade here and my stop loss is always somewhere here. Remember, these are swing trades, so you have to know risk and reward ratio, right? If you are really looking to win all this much, then definitely this loss is not a loss that can affect you in a greater way. Now look, now we are here at the OTE zone, right? Optimum trade entry. This is where now I'm selling again. I had my sell here and now I'm putting another sell here, right? Now it expanded to the equilibrium, broke the equilibrium, retested the equilibrium. I'm gonna zoom out, retested the equilibrium. Now price start moving. Price start moving. Remember my targets, right? Okay, let me return back again. Zoom in. Right here. Now my swing low, my entry at OTE. Now there, price start moving, retrace back a little bit. It's moving, it retrace back. Now stop loss is right here, right? But we want as much pips as we can get. We are not being greedy because the rules of trading does not allow traders to be greedy. But we only have a target. There's a difference between having a target and being greedy. If you want 3,000 pips out of nowhere, you are being greedy. But if you have a target of 3,000 pips, you are not being greedy. You only have a target of 3,000 pips. There's a difference between those two. Now, our price at OTE, we have our sell in profit, profit reduced, in profit, profit reduced. Now, we are moving. Remember, our stop loss is here. We put our stop loss at entry once target number 1 is hit. Let's drop. Now let me zoom out let me extend my feed so that it can ray the other side. I have my feeds raying the other side now. Now look, the trade, now our entry, remember, was here, right? Now it hit our target number 1. Now stop loss at entry point. Remember, this pair was really slow. AUD USD was really slow because this movement here was not even volatile. Now target number 1 was hit, stop loss at entry point. Target number 2 was hit, stop loss at target number 1. Target number 3 was hit, stop loss at target number 2 for other entries, right? Because if you take 3 or 4, I put 1, 2, 3, 4 targets because I normally take 4 trades per I normally take 4 positions per each for each trade that I make. Then here, as you can see, I think it's a little bit closed by my TDI, but I have my target number 4, which was not hit. It was 100 pips away. Then it returned. It hit my stop loss at target number 3. So how many pips did I close using this? This kind of trading is for people who don't have time, who claim they don't have time. So you just leave it running. You are controlling your trade because we have our day jobs. We have a lot of things that we do now. We cannot. This type of trading actually is for people who can't sit in front of a computer 24/7 to do the intraday trade. It's a swing type of trading that you take positions and you hold for a longer period of time. So from our OTE down to our target number 3, because this is where we collected much of our profits, to target number 1, these were 900 pips drastically. To target number 2, let me zoom in so that we can see clearly. These are 1,200 pips drastically. To target number 3, which was maximum, because if you hold something for 2 weeks, you want to make money that really deserve your 2 weeks time, right? 1,500, okay, 1,570 pips to target number 3, which is where all our stops were hit, but we had also the take profits were hit there. If it had dropped further down to my target number 4, let's say from my OTE to my target number 4, we were talking of 1,850 drastically pips, right? Then it started reversing. First of all, you have to take note of this. My swing low is here, my swing high is here, my swing low is here. My first target is exactly at our period of 1,000 pip range. So if you take a trade here, you are looking at closing it 1,000 pips away. That's why we had our quarters theory. So from this 100 to this target, these are 1,000 pips. Remember what I illustrated at the very beginning of the video? You can repeat the video so that you understand this clearly, because swing trades are, there's a lot of money to gain and there's a lot of money to lose here. So target number 1, 100 pips. So whenever target number 1 is hit, right, if you think it's going to drop further, that's when you're now moving your stop loss to break even. You're now moving your stop loss to enter, because the target that you wanted was hit already. Now target number 2, target number 3 and target number 4 are of your own added advantage. Because if we are using the quarters theory, the minimum trade has to close at least 1,000 pips. Because I was told that a small quarter has, not a small quarter, a large quarter has from 1,000 pip range, I have 250, 250, 250, 250. If you're day trading, if you're okay with 50 pips, then 250 pips is a great deal for you, right? Good. Now, we are looking at now reversing. As you can see, now it's reversing. You can do the same thing with the fib for buy setups. Let me try to do this. We were given our swing low and our swing high, right? Now we are looking at a buying setup. Although this zone here, only because our TDI is telling me something, but I am not at a 1,000 pip range where it actually begins. Look, from this swing low to this swing high, it didn't drop to the equilibrium, so definitely I was gonna miss this trade, but it's okay. I'm not supposed to take all trades. Then let's look again. So it's basically, let me say, I was not gonna get any trade using this method here on the daily chart, right? The buy setups, because still the sequence or the setups looks bearish. That's why I was not gonna get any buy setup out of this. So a summary of what I said, the quarters theory lines, which are 250 pips away from each other, 1,000 pip range, 250 pips, 4 250s, that's 1,000, which means a quarter, then 100 pips, 100 pips, just to control. I use the black line simply to control my trades that are now 100 pips, 100 pips, 100 pips. Then when it got here, it gave me a swing low from the swing high to the swing low, I put my fib. I'm gonna put the link in the description to a site, to my website, where you're gonna download the settings of the fib, where you're gonna download the quarters theory book absolutely for free, definitely, because I didn't author quarters theory, right? So the links in the description. So thank you if you made it all the way to the end of this video. If you find this information valuable, if you have any questions, feel free to type them in the comment section below, because we make time to reply to all the comments. Also, if you didn't subscribe to our channel, make sure you hit the subscribe button, turn on notifications, because we release videos like this every week, generally. If anytime we have valuable content that we think we can share, give it a thumbs up, subscribe. If you're not in the Telegram group, definitely there are going to be links in the description box. I'm gonna put the link to the website, the Telegram, and I have questions of people wanting to join VIP. Everything is provided in the website or in the description below. So with that being said, I'm out, guys. Peace. I'm out.